Hi, everybody. It's your girl Tiffany Matthews, Best on Realtor here in the Baltimore, Maryland area. Hopefully, you all are doing well. I'm not going to waste any time. Let's get right into this video and talk about ways you, as a home buyer, can eliminate closing costs and maybe reduce your overall costs in general when purchasing a home. So, one of the most common things that people do is they get what's called a seller's credit. And this is where within your contract, you as the buyer, you're asking the seller to provide you with assistance in purchasing the home by paying for some of the closing costs. Typically, it's going to be a percentage. Sometimes it's a flat rate, but that's the most common way that most home buyers are eliminating some of those upfront costs by asking for a seller's credit. Number two, you can ask for a lender's credit. Duh. So a lot of times your bank or whoever your lender is that you're going through, they have different incentives as well. And sometimes they will offer you a credit if they see that you need that assistance. And a lot of times, guys, it's just a matter of asking for it. If you don't ask, then hey, they're not going to just offer it up. One thing I do want to point out, you're probably thinking, okay, Tiffany, yeah, just ask, but I didn't know about this. So how would I ask? Well, that's a good question. And I would say make sure you have a realtor who is, in your corner, that is well educated, well versed in working with home buyers, so that they know the things to prompt you when asking for assistance to purchase a house. Okay? So that's that. Now, let's move on to the next thing. Next thing your lender can also do for you, they have different mortgage programs. One is called a no closing cost mortgage. So with this particular mortgage, basically, it is exactly what it says, no closing costs. What the lender does is roll that closing cost into your loan. So that way you don't have to come up with that upfront money when you're going to settlement. However, you know what this means, right? More than likely you're going to have a higher interest rate, and of course your mortgage payment is going to also be higher. The next thing that you could do to combat that is you can refinance your home after you've been in it for a while, so that you can lower those interest rates and avoid the high mortgage payment. Okay, let's move on to the next thing. So there are all kinds of grant programs, and you can go to HUD.gov, that's HUD.gov, and you can look up your state specifically to see what type of programs are available to assist with down payment assistance and also closing cost assistance. So again, that website is HUD.gov. Just check it out, follow the prompts, look up your state, and you can see what type of programs are available. A lot of times there's usually a first-time home buyers grant program that most people take advantage of, especially if you're a first-time home buyer. And again, just because you have owned a home before in the past doesn't mean that you might not necessarily qualify as a first-time home buyer. So it's going to be state specific, though. Each state has some different rules regarding that. If the key, though, is if you're not currently living in a home and you have been, probably, I think here in Maryland, I want to say it's 6 years. And again, check with your state and also your lender to see, because some lenders may qualify you with their grant program for first-time home buyers. It might be a 3-year program. Again, the state also offers different programs for first-time home buyers, so it could be 6 years, I think, here in Maryland. But check your state specifically so that you know what you might qualify for, and that is a big help. Also, they got some stipulations usually with that, but hey, you're getting some money, upfront money that you don't have, and this is going to help you get your foot in the door. You can always refinance later, right? Let's be smart, okay? So the next thing you can look at is they have, you can try to lower your down payment, basically. So if you can negotiate with your lender, and typically this is going to be determined based on the type of loan that you get. So for instance, we'll go back to the first-time home buyer. If you're a first-time home buyer and you're using a conventional loan, you can qualify for a 3% down payment. That is wonderful. If you are using an FHA loan, the home down payment amount is 3.5%. So that's wonderful as well. So the idea is to lower your down payment amount so that you have more money in your savings that you can allocate towards your closing costs. Basically, is the idea. Okay, another one, let's keep it going, I hope you guys are finding these tips helpful. You can also try to delay your closing date. So you can either try to hit it at the top of the month or right at the end of the month is what most people are suggesting when it comes to looking at reducing some of the upfront costs. So with your interest rate, it's a daily rate. That is the way it's calculated with your lender. So obviously if you hit your closing or your settlement date towards the end of the month, the last day of the month, you're only going to be charged interest on that one day. So that's a good way also to just reduce your overall cost with what you have to bring to the table when purchasing a home. Moving right along. I think I got 2 more to go. All right, so now you can buy down your interest. I know it's been crazy with the high interest rates, so buyers have been on pause when it comes to purchasing homes. And obviously, it makes a whole lot of sense because the interest rates have been so high, most people have not been able to afford the down payment, the closing costs, or the mortgage. So what we are advising and trying to help people understand, if you can get that seller to help you with some additional funding or credit, you can use a portion of that money to buy down your interest rate, which in turn is going to lower your overall cost up front and on the back end as well with your mortgage payment, because it will be lowered because you have a lower interest rate. This typically is only for a couple of years, so 1 to 2 years most people can buy down. And the idea is to refinance after that time once the interest rates have improved. Or just search around with a different lender because different lenders have different rates. So you want to be smart about this and not just go with the first lender that pops up, okay? The name of the game is get your foot in the door and then find other resources to refinance your home mortgage at a later date. Okay, the last one. I think this is number 8. Drum roll. I have a terrible drum roll. I know. You don't have to tell me. I know it is terrible. But the last one is rebate programs. So a lot of times there are different rebate programs that are offered by your lender. And basically it's a rebate on the closing. And what they do is it's a rebate and your closing cost is covered. But on the back end, typically your interest rate is going to be a little bit higher. So your mortgage payment is probably going to be more because it's similar to the roll-in type of loan. But remember what I said. Get your foot in there. Refinance. You can always refinance, especially if you pay your bills on time, your credit is in good shape, and you still are employed to obviously be able to pay the debt off. So guys, that is what I have for you today. I hope these things were helpful. Please get with your realtor, your local realtor, to help you with some of these tips that I've mentioned, and on the long term, save you some money, save you some headache, and save you some time. So till next time, guys, if you like this video, please click the link below and like. Also, please don't forget to subscribe. And I will catch you later. Peace out.